Welcome back to Market Day Report. I'm Chris Swift. We've had the markets open for a few minutes, and we've had some changes in the market since we opened at 8:30 this morning. So let's take a look at our corn market and see what we are doing here. And we have got plus on the day now. September corn up a half, 4.70 even. December up 1 1/4, 4.82 3/4. March up a penny at 4.96 1/2. That carry charge is still very strong all the way out through into next year. And even the bean market putting on a few more cents here. September up a dime now, 13.44 3/4. Novi beans up 7 1/4, 13.30 3/4. Got a 20 1/2 low and a 35 high, so creeping up towards the top end of the range right now. Got March beans up 8 at 13.46 even. We'll take a look at our Chicago wheat this morning. Chicago had been softer, still is, but not as soft. Down a nickel on September, 5.92 3/4. December down 5 1/4 at 6.17 3/4 with 12 to low. And out into March down 4 3/4 at 6.43 1/2. Kansas City hard red winter wheat, a little bit softer as well. September down 3 3/4, 7.39 1/4, 36 3/4 the low. December down a nickel, 7.47 1/2, and March down 5 1/4, 7.51 1/4. Minneapolis spring wheat this morning down 1 3/4 September, 7.89 1/4. December down 1 1/2 at 8.04 3/4. My guest coming up is Bubba Horowitz with Bubba Trading. He's out in Las Vegas. And Bubba, I certainly do appreciate you taking the time to be with us here this morning. We got the export news out, and we've had a little bit of a change from the overnight markets to a little bit better this morning. Tell us what's going on.
Great to be with you, Chris. You know, what's going on is that the markets are having a minor bounce, which is not very impressive when you think about how much they should be bouncing and the amount of weight and pressure that are still on these markets. I think that, I think there's a real potential that there is some intentional selling going on, and I wouldn't be surprised if it was from the Chinese to keep these prices down as they try to accumulate farmland. And these bounces are not very good. We should be bouncing much harder based on the way we've sold off, based on the cost of production, based on all the factors that I would look at. But again, volumes are still light, and there's like a big weight on top of these markets that continues to keep them lower without enough of a short covering rally, which is what we should be seeing here.
So we know that the farmer has probably got at least a portion of their crop either hedged or already marketed on there. We're sitting down here at kind of the low end of the trading range. Is there anything for them to really be doing here, or are we under the anticipation that we're just going to start storing grain?
Well, I think we're going to store. I think, first of all, I believe that they should always be hedged at some point so that they have protection to the downside. As we talk about making sure that you have downside protection while leaving the upside wide open, because we don't know that the markets won't take off the upside. But I think here you're going to start to see some storage, because I don't know that they can afford to release a lot of these prices just enough to cover costs, because overall I think they're going to be selling at a loss at these prices.
Well, so let's take the opposite side of it, and we know that the farmer needs to sell that inventory. But how about the cattle feeder or the hog producer out there that is procuring that inventory? The low prices that are bad for the farmer tends to be much better for the livestock producer.
That is true, but the best market is when it's good for everybody, right? The best scenario is when all prices are moving higher and we're having natural demand that is driving those prices higher, not artificial interest rates, not artificial markets that are being traded, but actually when there's a true demand. And of course, as you look at the retail end, prices are much higher, wholesale end prices much lower. Not a very good combination when you really think about it.
Yeah, I can understand that. And we'll discuss basis real quick. We know that we had just a little bit of a change in the basis on the Mississippi. We're getting some rain coming in this week. Do we see any more problems with that now?
I don't think so. I think that we've seen so much punishment. I think that we just have to see if this weight they'll get lifted up, or if the markets will regain some volume, which can actually force these prices higher.
All right. Well, speaking of volume, real quick, have you noticed any big changes in the volume in the grain markets?
No, it's horrible.
Yeah, that's kind of the same way I've been looking at it. It's just not. We just don't seem to have as much participation in it right now, and at these prices, I can see why.
Well, you would think there might be, that would be my thing. You would think there'd be some buyers coming to these markets right now, but they're not. They're not even basically participating, which is kind of scary and nerve-wracking when you think about the bigger picture, because these are pretty much value. But of course, until the equity start to break and some of the other factors start to take place, there's going to remain pressure here with also the funds pushing down here on these as well.
Absolutely. Bubba, hang on just 1 second. We're going to go take a commercial break, and we'll be right back with Bubba Horowitz. Stay with us. Welcome back to Market Day Report. I'm Chris Swift. We've seen the grain markets move a little bit here in the early sessions of it. Let's take a look at our livestock market and see if we've had any changes dramatically in it. And looks pretty much about the same, maybe a little bit softer. August fat's down 57, 178.20. October down 72 at 178.52. December down 87 at 182.70. Our feeder cattle market had been soft this morning. Let's see what it's doing. Still a little bit softer. August down 140, 243.97. September down 185 at 247.15. And October down $1.97 at 249. The hog market had been a little bit higher this morning starting off, and they're still squealing pretty hard. October up 132 at 79.5. December up 105 at 72.22. And Feb up 92 at 76.50. I'd like to ask Bubba to come back in and join us here for just a second on the livestock market. And Bubba, we've seen the cattle market at all-time new historical highs. I've always been told you buy high, you buy low and sell high. Is this a time to be looking at marketing some cattle?
I think you should be marketing it pretty aggressively in here, Chris. Again, these are, high prices cure high prices, and the only reason these have been driven so much higher is because of the supply shortage. And as that starts to get replaced, and then we know it takes some time, but as it starts to get replaced and the economy gets worse, there's going to be less of a demand for beef. And I think that this would be a great opportunity to, at worst, protect some protective hedges up here, but I'd be looking to sell, and I am a seller myself up at these prices because we are at all-time highs, and we're up here for all the wrong reasons. Again, it's not really a true demand. It's a shortage combined into where some can still afford to buy it, but the average American really cannot afford to be buying beef right now at the retail end. So I think, to me, I'd rather be a seller here than a buyer.
Yeah, Dr. Peel made a point yesterday that we had more imports starting to come in. Our exports have been a little bit soft, so that's keeping more product domestically here. Do you see the same thing? Are we at some kind of limit in our quota? Is there more expansion that can be taken in our import quota so we can get more of either South America, Australian, New Zealand beef in here?
Well, we can get more in, but again, we still have a massive shortage, and us being the big supplier are really in some, not dire straits, but in a little bit of a problematic area here. But as it starts to replenish, that's where I see the problems coming in, and we don't really have much to be able to export. We have hardly enough to be here. So it's everything is not set up, and certainly the market's not rallying for the best reasons, and known they're rallying because of just the problems that we have versus the actual real profit-making opportunities.
Sure, absolutely. Bubba, you don't know how much I appreciate you taking the time to come on with me this morning. That was Bubba Horowitz, and he's with Bubba Trading. Suzanne, got a really exciting market going on. We had some changes in the grains.
And great question, great insight. Wondering if we're going to start to get beef imported from other parts because we're so short here.
Well, and we always do. And what we tend to do is we tend to come in and bring in lean meat, and then we blend it with our white meat, fat here in the U.S., because that's what we raise is fat cattle. So we tend to have a little bit more of that left over. So we blend it, and that's where we get our hamburger meat, and mostly for commercial restaurants.
Right, and will that import start to increase?
That's what we're looking for, yeah.
Thank you so much, Chris.